she was near to a homeless. She was so joined the military out of that despair, out of that situation. So through her journey, it was like, whoa, she's a single mom, two.
The military taught us discipline, it taught us leadership, but it never taught us how to really build wealth and income. This is the Active Duty Passive Income Podcast, and I'm your host, Marky Sitch, a United States Marine turned full-time real estate investor and educator. I'm bringing you the most successful military, veteran, and military spouse real estate investors, entrepreneurs, and industry experts to break down exactly how they did it, so you can too. Hey, everybody. It's the Active Duty Passive Income Podcast again. It's Marky Sitch, and today we've got Ted Canto coming in to talk about, all sorts of stuff. He's an entrepreneur. He's also a loan officer, a mortgage officer. He's helped probably hundreds at this point of military families not only either acquire their first home, but make smart investment decisions. And so we're going to walk through some things about just common pitfalls. Some of just the most fundamental things, but that you have to be brilliant in to really make an awesome return, right? And so that's where Ted shines. He's been helping our community for years now. And so we really want to, Ted, welcome aboard. I'm glad to kind of get into your story and see how you can continue helping out our members. Awesome, Ted. So let's start off with your background. So military background, a little bit of family background. How did you become Ted Canto?
I have some time. So I grew up I actually am of a political refugee. So we came to this country. Interestingly enough, my father he was basically running guns. At the time that came here, there was a revolution going on in the Dominican Republic. There was a dictatorship going on, and so my dad ran guns against the government. So he got spotted, and so anyway, we ended up here working in Boston. Interesting story. Up in a small town called Lynn. It's maybe not so small anymore, but Lynn, the city of sin, not the way you went in. So there, I made the decision to join the military. Not a lot of options at that specific moment. Getting into a lot of trouble. A lot of my friends were getting into a lot of trouble, and so I marched myself into the recruitment station, a recruiter's dream. I walked in, they're like, "Where do I sign?" So that. Oh
they
no!
Didn't need to sell you
they were
at all.
looking at each other. I still remember the look on their face. They're like, "This dude just walked in on us." That's how I got into the military. And so later on, I went to Desert Storm and went on learning after that. So that was kind of my introduction into the military. But do you want me to go on about my how I got into mortgages? Okay.
Yeah, well, a little bit, because I know that there is, because you've been doing this for so long, there's a passion behind that, right? And maybe the best really kind of dovetail into that story or bridge into that story is let's just talk about maybe the biggest mistake you see military families making when trying to buy a home, and how can they avoid that, and how you've been able to help that. And maybe that kind of that'll help paint the story there for you as well.
Question of positioning. I've made a lot of mistakes. I'm 55 now. Let's leave the life lessons out of the equation. Just financially, I've made a lot of mistakes because I didn't have a lot of I just didn't have the upbringing into money, right? Parents kind of just did whatever they did. They day by day, week by week. So I kind of inherited some of that. So why I mentioned that is the question. You made the statement about my passion. So getting into mortgages, I started learning a lot about numbers. Actually, before that, but as I got into the mortgage industry, started learning a lot about numbers and ensure that we're in a row, right? So if I was going to work in this industry, I needed to start getting my ducks in a row so that I could educate others to get their ducks in a row. And so to your question about military families, I'd say the pitfall, if any, is not having your ducks in a row, not understanding your numbers, not understanding kind of like a Bostonian budgeting, their money, and just know their numbers. I made a joke the other day. I was speaking in front of a couple hundred people, and I said, they say the number one scariest thing to do is talk in front of a crowd like this. The second scariest thing to do is my opinion, is someone's credit report. So most people are just horrified of having this stranger called Ted pull out a credit report. But as I tell a lot of military families, this is the beginning, pulling your credit report, being able to go over this and understanding how it works is the beginning to it all. How do you know how to manage your money? What incentive do you have other than maybe saving and letting it grow? But credit is power, as we all know. Credit and being able to leverage that is key. So I would say to military families, know your numbers, pull your credit, and get familiar with it.
Yeah. We talk about, and everybody knows the phrase like brilliance in the basics or be brilliant in the basics, right? We actually recently, as a team, we watched this video by Brian Jeske. He's the CEO, founder of, or one of the co founders, I think, of Airbnb. And he talks about how they look even beyond just brilliance in the basics. They're like, hey, be like 7 stars, in the basics. And it sounds like what you're saying, and I don't want to put words in your mouth, but like a lot of people, they want to get to the more exciting
Yeah.
stuff almost, right? Like instead of just like, hey, double down on the boring stuff, the basic stuff, understand your credit report. Gosh, that is just going line by
Yeah.
line is so boring. Or just make sure you understand your monthly, like, take the last 3 months, just figure out, okay, like straight up, where am I leaking here? How is my money just moving in my accounts? Like I have a habit, for example, across all my business accounts and personal accounts is to check my bank account every day. It's almost the first thing I do every morning because it's just like it helps me feel more in control, even if I'm
Mhm.
scared to look at it
Right.
sometimes because I know something's going on, like building that habit. So just being brilliant in those understanding the basics, because then that'll just give you that like launch pad to actually do the more exciting things. But you don't want to shoot yourself in the foot by just going for the exciting things and then falling flat because you didn't realize how bad your credit score was, or you didn't realize that that one loan is going to affect your
Mhm.
DTI
Yeah.
or
Or
whatever,
paying
right?
a payment on near to maxed out rate. So it's surprising to know this day and age how many people don't know writing a high balance in a credit card is detrimental to the credit score. Where's the sweet spot? So do I pay it off? For some, yes. For some, no. Definitely don't pay it off because you fall in that bucket. Yeah. So that right, learning how to maneuver that. I didn't know how to do that for most of my life, even my younger adult life, until I got into the mortgage space. Uh, that's what I would say about that.
Okay. And now let's pivot to just like real estate in particular. I'm assuming the answer is probably similar. Like they're just, not brilliant in the basics. They don't have their ducks in a row. Maybe I know you have an awesome story you told me about in advance about Tanisha where she kind of felt completely lost, but then she ended up being successful with her first home buyer. Maybe there's somebody that's even better example. You mind like walking
Well,
us through
what I
that?
didn't tell you about Nisha is that she was near to homeless. She was homeless. She was
Holy
homeless,
cow.
and
Okay.
so in the military, out of that despair, out of that situation, and so her through her journey, it was like, whoa, she's a single mom, 2 girls, homeless. So so thing
Before the
yeah.
military? Okay, so walk me through this. So you met her or you guys got in
No,
contact
no, no, no,
prior to
no.
her even joining the military. She's
No,
basically
I met
homeless
her
or
while
no?
she was in the military. So she called
Okay.
me through, through the community, and slowly I got to
Oh, through
yeah,
ADPI? Like she was on
yeah.
our Facebook group or
And
something?
so
Okay.
slowly, asked her name, but, yeah, so she reached out to me and slowly, we built rapport and she kinda gave me her whole life story. So at least she did not come from a financially fit, right, background. And so buying her first home, I mean, it was pretty emotional. It was pretty awesome to help her get in her way. Now, she's now calling me talking about an investment home, which is like, wait a second, like I remember you just as a little baby buying your first home. And so it's been pretty cool to watch her grow that way.
Yeah.
So to be honest, I don't know your question. I just kind of went into the long story about Tanisha. So
No, no. So no, you're fine. Basically, what I'm trying to figure out is like, what was the thing? Because we were talking about like the biggest mistakes or not being brilliant in the basics. Like, obviously, she
right.
did not have her ducks in a row, but you were able to
Yeah.
help her get to her first home. So it seems like the cliche term of like, hey, if they
Right.
can do it, I can do it too. Like, if
Right.
Tanisha could do it,
Right.
anybody should be able to buy a home. Which then, by the way, this is one of the things that I love to mention. If you guys did not know this, those that are listening here, right before COVID started, right, 2019, the Federal Reserve released a study that showed that on average, at every single income level, so don't start thinking like, oh, it depends on what income level you're at. At every single income level, on average, those that own a home versus those that rent are at least 40 times
Mhm.
wealthier on average. So Tanisha going from like damn near homeless to being able to own a home, there's probably a lot like what were some of like the biggest things that you were just like, okay, this is what really, made
It
that
was her
bridge happen?
credit. She came to me, exactly remember the whole credit
Okay.
situation, but I know it wasn't good It took us probably a good 5 to 6 months to whip her into shape. Now she had to do the work, and I think that's probably to the spirit of what your kind of questioning or conversation is, really having the willingness to do that. Because as you said, looking at line by line of a credit report, your bank saying like, "Oh, here we go again, bills piling up." It could get very scary.
Yeah.
In fact, I believe that it definitely invokes a level of anxiety in a lot of people. So, avoid it. And she was willing to do the work. She would probably call me night and day, just asking me constant questions about, "All right, did I do it right? What do I do next?" And so she did the homework, and it's really what it took. Uh, to always tell people, "Hey, can't qualify you just right now. We will, but you gotta do the homework. You gotta do the work." I don't like saying no. I just like saying when. So,
Yeah. That makes sense. And, you were saying that she had to put in the work. A lot of times when we have new students coming in and like, I tell them like, look, it's kind of like the military. You join the boot camp. There's a framework, there's a structure, there's support, there's all this stuff, but you still have to do the
mhm,
push-ups. You know what I mean? Like if she wants to increase her credit score, there's no magic way of doing it. She still has to put in the hard work, especially if you're digging yourself out of your own home, your own like past doings. It's a very, you got to have some humility, and that's not always easy, but that's awesome that she was able to get over that. And so now, okay, what about the VA loan
mm,
specifically? I'm not sure if she
yeah.
used a VA loan or not, but like, is there something that you're just like constantly like, oh my gosh, you created another light bulb moment for a military family? Like, what's like the one surprising thing that you always go back to that they don't realize about the VA loan? Is there something like that that stands
Um,
out?
Probably several things is that they don't understand that there are closing costs, right? And just because it's zeroed down, but it doesn't mean that there's
Ah,
no
okay.
closing costs. They're like, "Wait, but I'm using my VA." I'm like, "Yes, you are." Closing costs. So let's talk about that and some expectations, right? Whether the seller pays for them or not, you have to be prepared for that. So that's definitely
Okay.
something that the veterans are, at least new ones that come to me for the first time understand that. So I tend to address that a lot. And the other thing is seeing money, and again, it's not just a veteran situation. It's probably 90% of my clients, they don't understand why they have to source money. Well, it's my money. I have $20,000 under the mattress. I'm just like, yeah, well, the law says that you can't just $20,000 into your account, just because. So I have to walk them through that
Okay.
process of sourcing their money.
Yeah, I remember on one of my homes that I went to did a conventional loan. I don't remember why, but it was like excruciating going through some of the sourcing. I don't even I think it's because like I had a gift from my parents or grandparents or
Yeah.
something, and it was just like this whole thing. But what I think is going to be extremely valuable right now is to dig into the closing cost because truth be told, I
Mhm.
always get this stuff confused. Okay. I know that there's like this buzzword of like the
Mm,
4% back thing, right? Like that's a thing.
right.
I'm not making that number up, right? So A, is that the real number? B, I know that there's some things that qualify to be a part of that 4%, some parts don't. And then maybe you have a strategy on like, okay, this is how I've seen it work to where you can have, I mean, we've all heard, especially if you're hanging out in the ADPI Facebook group, of somebody saying, "Hey, I walked away from a closing with a check in my hand," right? Like, how does this
Mhm.
stuff even happen?
We can really walk away with a check in their hand if it is the seller's money, right? So, what we
Okay,
hear
okay.
is just part of the story, and, what I've seen happen plenty of times, so it's the first idea that comes to my head, is that they put a deposit down, which most times when you're buying a house, you have to put an earnest money deposit to secure the contract.
Right, right.
Well, depending on the numbers as far as whether the seller is paying any of the costs, the lender's paying any of the costs, and if there's any subsidy of some sort that will lower that cost, oftentimes, in this case, veterans will walk away with that earnest money back, being written back to them. So sometimes they're a little surprised that, like,
Mhm.
because I can't tell you how many times people write that check, that earnest money deposit, and they write it off, right? It's done, like, "Bye-bye." Yeah, they just forget,
Just
and
forget.
there's a cost of doing
Okay.
business, which technically it is. Technically it is. It secure the
Right, to
contract.
secure the contract, to make the seller
Right, and
believe
so
that you're legit.
sometimes that
Yeah.
money gets consumed by the closing costs, and so they don't ever see that check come back or part of it come back. So when do
And I'm just
yeah,
gonna go Barney
yeah,
style
yeah,
here. sorry, Ted, just real quick. For those that are just like,
Right.
this is your first time learning about the home buying process. So earnest money deposit, sometimes called EMD for short, it goes into an escrow account, typically at the title company, who's the intermediary for this entire transaction. It's like the soccer field for where the stuff happens. And, both sides trust the title company. They have attorneys on staff, they have special bank accounts, everything's set up to handle these types of transactions. And they're in charge of making sure that when all the money gets thrown into the pot, that they can reconcile it and be like, this goes to the agents, this goes to the seller, this goes to the buyer, if anything, the end, right? And that all gets done on a HUD statement, right? So I just want everybody to know, like, that's what we're talking about here. And so the spirit of the matter is, I want to buy a house. Yes, there's an awesome contract. Yes, the seller and the agent think that we're legit. We're actually going to close on this. But just to prove to them, I might put down, I don't know, a couple $1,000s, sometimes even less. Sometimes, in commercial real estate, 1% is the rule. It goes towards either closing costs or it gets refunded, per Ted's point. But that's just to show them that you have some kind of skin in the game and that you are going to, actually go through the steps of the contract, do your inspections in a timely fashion, right?
Absolutely. It's probably worth mentioning. Sometimes when if the seller does contribute towards the closing costs, money can actually be used to pay off the veteran's debt. So if there's a credit card if there's a
Okay.
credit card that's preventing that approval, we get sufficient amount of or credit, we can apply that seller credit to paying off that credit card. Now qualifying.
All right. So let's talk about this. Let me
Yeah.
just take one more step back. What is the maximum on a VA loan that a seller can contribute to any of these things? Is that the 4% thing, or
Yeah, so
am I
the
misunderstanding?
4% thing is a very it's an elusive target. So they say 4%, but it's not really 4%. It could be a lot more than 4%. Yeah,
Okay,
there's
that's what I
certain
thought.
costs, there's certain line items, let's be clear. So there's a lot of different line item costs inside a statement, known as the HUD. So certain line items cannot exceed 4%, right? And so if it does, then we have an issue.
Combined
Yes.
total?
Well, not all the closing costs, just those line items.
Okay.
So those line items can't exceed 4%. That's kind of
Okay.
where we get into the stuck at 4% because there's so many of these costs up here, but there's also these other costs that don't go into the equation. So combined, it can't exceed 4%, right? All total
Mm.
because these are so high. However, that's very rare. And not only that, but ways to kind of cook numbers so that that happens. It's extremely rare, but it is part of the guidelines. Yeah,
Cook
well,
the
just move the
numbers.
numbers around.
If you guys want a
A
professional
cooker.
number cooker,
As
you
I
got
said
Ted
earlier,
right
that probably
here.
doesn't sound good, but it's not. It's just moving the numbers around so that those line items don't exceed the 4%. It's rare. However,
Okay.
costs can
All right.
exceed well beyond that. So, or the seller credit.
Okay, so it
Yeah.
can go beyond 4%. It's only some of the line items, they can't go over 4% total, but other ones can't. So let's talk about the one you just mentioned, credit card debt. Do you know, does that fall
No,
into that
it does
4% or
not.
no?
So,
Okay, well,
yeah,
that's awesome.
yeah, yeah.
That's awesome. And so, and for those that are listening, that you're like, okay, that sounds pretty cool, but why does that actually help me? Well, because your credit card debt counts towards your debt
Right.
payments every single month, which decreases how much you can borrow. So you might not have as much negotiating power unless somebody like Ted and an agent who's a good partner for Ted, who they're both in your corner doing this deal with you, that they can see the forest through the
Mhm.
trees. They can be like, wait a second. I know that the seller will be okay with like crediting back a random $2,000 on this 300 payment card you got. That $300 is crushing you right now. We don't want to affect your liquidity. Let them just credit you that $2,000 or something. And maybe this
Right.
deal will go through. Right. So now you have a credit card that's at closing. That title company, remember the ones I was saying, they're like the referee on the soccer field. They make sure that
Sure.
gets paid off. Right. They'll send it directly to the credit card company. At
Yes.
least that's how it's happened to me.
Yep.
So that's huge. What about rate buy-down?
Yeah, that
Can
too.
you talk about that?
So in today's high rate environment, I wouldn't even say high rate, but it's a higher rate environment. Those can contribute towards the rate. obviously the veteran can actually buy down money towards buying down their rate, and lenders can too. So depending on you're dealing with, lenders can actually apply a lender's credit towards that. Oh, I being in the
Okay.
ADPI community for quite some time, that's always a conversation, right? Oh, buying points. Well, how many points did you buy? Time, yes, it didn't make sense. Right now, it makes a lot of sense because rates aren't going to be coming down anytime soon. So to be able to buy down a rate and pay an extra $4,000 or $5,000 to buy that down and save yourself 300 to 400 bucks. Well, if you did the math, you can still recoup it within the same year, if not a little bit over a year, which is phenomenal because thumb is typically
Right.
recuperating that money in the first 3 years. So if you can recoup that money in the first year to 2 years, even maybe 3 years, it's still worth it. And so, Lee, still worth it. And
It's still
so
worth it.
lately, I've been
Right.
seeing a lot of people buying down. Makes sense. So, I would have to say about buying down. It case by case, but I am seeing probably more cases of it than I
And
have
is
in a while.
and so can the seller contribute to that
Yes,
without it counting
yes,
against the 4%
absolutely.
limit? Okay, so guys, if you're listening to this, like, look, I'm not saying to be to be one of those annoying people that will go to an agent, maybe one of our awesome ADPI local mentors, and working with somebody like Ted, who's also one of our local mentors, but on the lending side, and being like, I'm only gonna get a property if I walk away with a check. I get 4%, I get my credit cards paid off, and I get a rate buy down. Right? That's not the point. Like, you
Right,
got to be realistic. Okay, it's not necessarily like 100% of buyer's market out there, not by a long shot. However, these are tools in your chest. And what I have found personally in my life is the more aware I am of the tools, and I literally imagine or on a spreadsheet, but like, how would I use this? What that does is it puts these glasses on you, right? You got a lens on you now to where when you do find a deal to where it might make sense, you're going to spot it maybe when somebody else wouldn't have. Just allowing yourself to have that education and preparedness. And then, oh, and by the way, you might have somebody, an agent or a seller's agent, perhaps, that you're going to have to educate on this. And the better you understand it, the more like Barney style, like I'm a Marine, I need everything like drawn out in crayons. Like the easier you're going to be able to like
yeah.
actually lay it out for them because
Yeah, and
education is
and and,
power,
you
right?
you brought up a memory, so long memory ago memory in that it was a veteran, received sufficient for credit to buy down the rate. So, in the business so long, I second nature for me to be more of a consultant. A lot of loan officers, we just take the paper, collect the documents, sign here, and then we're done. So, as I'm going through the paperwork and I'm looking at the contract, I go, "Okay, they got a lot of money here to pay down the rate." So I punch in the number and I save about $250, maybe in some change payment, right? Lowering the rate. So monthly payment, right?
Monthly
On the
payment,
mortgage.
right?
So briefly looked over at the credit report, looked at his liabilities, and saw a $600 payment for like a $14,000 debt. Like, hmm,
Wow.
know, long story. We can get into semantics about that, but nonetheless, it was about $600 monthly payment. So I'm looking at it going, "What about it? We just paid that off of buying down the rate
Right.
that's only saving him 200 and something dollars. We've just saved him an additional 400 and something dollars." Right? So I approached him with it and he said, that's because I have the money to pay that car payment, that money to pay off that car anytime soon."
Right. So it's one of those where it's like because he's on the, it's an amortized payment.
Right.
It's always going to be the same, payment monthly, even when like the loan is lower after years of paying off the car, your monthly payments are still the same. So that's why like 14 grand, but he had to pay
Right.
$600 every month for it. So I see what you did there. Yeah. You just looked at like apples to apples. You're like, I got, for sake of example, 14 grand that I can throw at something. I can either do a rate buy down. It saves him $250, or we can pay off this car loan
Right.
and it saves him
Right.
$600. Like, that's huge.
Right.
That's more
Right.
than
Yeah.
double.
At net, he was saving about 400 and something dollars a month because obviously we give him the higher rate.
Yeah.
Right.
On
Right.
top of the other
So
option.
so
Yeah.
it's being able to have
Wow.
type of professional looking at your paperwork and being able to look at those numbers and make sense of them. Not everybody, it's not going to work for everybody because some people are like, oh, and I've had that too. Yeah, I plan on paying that or trading it off in a couple months. No, I'd rather take the rate. All right, great. That's it. But how about if you're not? And one who's not aware of these things and looking at numbers and strategizing, for me anyone. So important. So anyway, it just came to mind when you were talking about the numbers. Like that can happen. That can
Yeah, that is a great example. Now, and I guess the trade-off is they're like, okay, do you want to, because it's a long-term thing
right.
for the house, right? Unless you're assuming you're going to be, you know, selling it soon. Whereas the other one is a short-term thing, but
What's important? What is it?
again, it might help you
Right.
afford the house in the
Right.
first place, right? Because your DTI now is better. If you pay down $600, like you eliminate six hundred
Right.
dollars a month out of your life of something you used to have to pay. Now your DTI is probably
Correct.
much
And
healthier
he
than it
was
was,
active.
right?
He more than likely he wasn't going to be at his duty station for probably more than 3 years. So, if you do the numbers, he's off and about and probably going to rent it. So, it just depends. It's case by case, but yeah, it just depends.
Just depends. Yeah, just depends. Okay, awesome. Now, what about the economic climate right now? Well, you mentioned a little bit about the interest rates, how they're probably not going to be going down too much too soon. They're definitely not going to go down as fast as they
The
did
previous years.
before
Right.
and during COVID,
Right.
right? There, I think everybody would kind of agree there. Like that was a
Yeah.
black swan situation, and I think also the upswing on that when in starting in like what April of 2022 when the rates just started screaming up every month, right? That's probably not going to. Well, hopefully, will never happen again. But it's like this slow oscillating like
Hmm.
normalization that's happening right now, right? Because everybody's just getting used to this new world
Yeah.
almost like
Sure.
financially. So is that what you see? Is that what you would advise everybody to like just now is definitely not the time to be like, oh, I'm going to wait for the rates to go down
No.
or up or whatever, right?
So what we are seeing in the last, and I'm looking at this right now because I'm tracking this since yesterday. So today again, bond rallying because this is, I think, we are starting to come to this where economy is cannibalizing itself. That means for me that because rates have gone up, because affordability, obviously the key word here is inflation. Inflation is finally people think politically they were just like, not gonna get into politics, but nonetheless, politically, I think people were just
Yeah, yeah,
saying,
yeah.
"Let's wait till the new president comes into place and see what happens." And some people were hurrah, some people like, "Oh my God." And so I think finally they're realizing that don't get controlled by the president, no matter who he is, right? And people are now going, wait a second, instead of buying that extra cup of Starbucks coffee, they're starting to put it back in their pocket because people were just enthusiastic for the new presidency. Some people weren't, and so you got this push and pull going on. I think people are finally realizing, like, I think like
Gotcha.
I don't know if I want to spend my money because rates didn't come down like I thought they were going to do, and that and good thing because once that starts happening, and that was the goal all along for the last several years, start holding back. People start holding back, then the rates start getting cut. Seeing the rally, I'm seeing the bonds starting to shift in that direction. So, I think rates will be low.
So when you're saying bonds,
No,
like,
no, no, no. Go ahead, ask the
oh,
question
sorry.
because it's an important one.
Yeah. So macroeconomics is what we're talking about right now. So you're talking, hey, it the sentiment is that, hey, maybe I'm not going to buy this Starbucks. Maybe I'm going to put it in my pocket. But on a macro level, what's happening is that means that people are saving their money away long term. So they're buying something that's very stable, which is like am I saying this right? It's a government bond. So it's basically like, hey, this is something that's going to grow barely
Right,
nothing over time, right? But it's very secure. It's kind of like, a lot of people talk about Warren Buffett. I hear this all the time, like, oh, Warren Buffett sold stuff and he's holding bonds. Like that's because he's like
right,
priming for another buy, right? So like what's happening is people are just going into like, hey, they're in pounce mode, but they're like storing cash mode. They're like, we don't want to do anything right now. Let's see what shakes out. And so that's what you're saying is like, I mean, some people could say, hey, that's a sign of like good things to come, like they're preparing for awesome opportunities.
right,
But I guess it depends on who you are. Those opportunities
right.
could be at somebody else's expense, right? So that's what you're, and because of the bonds, does that necessarily mean that interest rates
Well,
might go
they're
down a little
rallying,
bit?
meaning they've gone a little lower. They've gone a little lower yesterday. We had a good rally, and they're going down
Okay.
again today. What's the magic number, Ted? That's what everybody asks me. I don't know. I would be a very rich man. New. However, see us hanging in the sixes probably for the remainder of this year. If S will probably be somewhere in the high fives. Oh, and that's just kind of where we're at
Okay.
based on
Okay.
a lot of friends and also the reports that I study and I get every week. Oh, I thought you were gonna ask me about bonds and how does that relate to rates, because that's an important piece for a lot of, new people,
Sure.
even
Yeah,
seasoned
sure.
PI investors. I still get into it with them. They're like, really? But the president said it has nothing to do with the president. It has to do with the mortgage-backed security, which is a bond. Now, we definitely can lower rates, and that affects short-term rates, which with more credit cards, revolving debt, that sort of thing. On mortgage side, that's the thing is a mortgage-backed security, which is a bond, and
Which
and
is a bond.
basically that controls the interest rate on mortgages. So oftentimes I get the call like, "Hey, they just lowered the rate." I'm like, "Yeah, but actually the mortgage rate went the opposite direction." So that's what we're starting to see.
Because that's based on the appetite of people wanting
Right.
secure
Right.
money, right? So the more security the
Yes.
world wants, or America wants in this case, that is decoupled or separated from necessarily
Correct.
the Fed rate. So whatever the Federal Reserve sets, if the sentiment outside of that is, hey, like, no, 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 we want riskier money, then the rates might go up. But if people do want secure money, it might fall in
Yeah.
line, but it may not.
Definitely
Just
you
yeah,
hit
okay.
the word right. The sentiment, the public sentiment out there will dictate which way that goes, and just sometimes the market will too. Most times the market will, but the other thing too is that the market it's time for correction. We've had a long, long rally, and so people are creeping
Okay.
forward with a lot of precaution, and so there's news about it too. There's overinflated stocks and so forth, and well, does that bup or implode? Who knows? But I think right now, I guess what I'm really trying to express is right now, I think people are finally taking precaution. These
Okay.
tariffs
Okay. I see
talks,
what you're saying.
yeah, hence the
Hence
bond.
the bonds.
Tariffs, what's all this, global
Okay.
economics so all of this is gonna slow things down. If it slows down, then you'll see mortgage rates start to subside with every other type of interest rate.
Okay. Well, I guess we had a very educational discussion about interest rates, but all of that to say that we do not have
No.
a crystal ball, everybody. We're not sure what the heck is going to happen. So, but remember the lens I was talking about, like through which you look like, hey, this is your sign to get brilliant in the basics. This is one less variable you should be worrying about. And, outside of the interest rates, just get smart on finding good deals and underwriting good deals. And you know what? They don't necessarily have to be home runs. Right now might be a great time. If you're in the ADPI community, maybe you just joined our mentorship program and you're like, hey, I want to get not only my first home, but I want to start getting rentals. And you're like, oh, it's not hitting that whatever cash flow mark you want. Like my message to you right now is to get practice. This is a sport. Even if you get a few, base hits, that is going to help sharpen the lens through which you find the greatest deals down the road. Like definitely and work with awesome people that have seen hundreds, probably thousands of these deals, like on paper, black and white, exactly what it shook out to be like Ted, right? So if you guys are in our community, our Facebook community, right, or in ADPI campus, Ted is there hanging out. If you want to get a hold of Ted, read the show notes. His contact information is going to be there. Also on our website, if you want an awesome, what did you call it? Numbers cooker, right? To work on your
Yeah.
numbers and get you an awesome loan done. You can also find him through our website up at the menu. There's a way to connect with awesome professionals like himself. So, is there anything else that you're just like gives us a little bit more insight into Ted that you're super passionate about outside of maybe real estate or your military background and that kind of
Um,
stuff?
Fits. I'm a life coach for men. So
Yes, yes,
I
I
run
heard
a
about that.
company called Men to Kings, mentokings.com. And so that's my passion outside the mortgage industry. I know that in changing world, a lot of men have finding themselves a little bit confused and lost in this world, especially where a world that tells us not to cry and express ourselves. So I did a program
Mm,
that kind of gives a roadmap of what life can look like, purpose and integrity and be a leader in and outside of the home.
awesome.
So yeah, I think one of my passions.
Love that. Is that kind of like does that scratch your like need for service or giving back
Yeah, I
kind of
mean,
thing?
married for 20 years, month,
Woohoo!
and yeah,
You
well, I
must
was
be
gonna say that
patient, Ted.
journey brings a lot along with it, a lot of bouts with divorce, and so, every bout that I've had, not that we are divorced, but with every pill that we've passed, taught me a lot. And plus, I'm a personal growth junkie, so I've been doing personal growth for close to
Mhm.
17 years now. And
Love that.
so my lessons through my military lessons, through my professional and personal life, definitely have a knack for it. I've always been somewhat of a to coach or mentor. People just kind of flock to me for a lot of advice. And so one day I just woke up. I'm like, you know, what the world really needs is a clear-headed, strong man. And so I created a blueprint for that. And so yeah,
That's awesome. Thank you
yeah.
for sharing that, Ted. Yeah, like I said earlier, if you guys want to get a hold of Ted, have him cook your numbers for you. I'm kidding. I'm kidding. It'll be in the show notes. He's also on our website. He's in our community. He's been with us for many, many years. He's a wealth of knowledge.
Thank you.
Thank you so much, Ted. You don't have any saved rounds or parting
Yes,
words?
because
Do
you
you
were
have any?
good. You hit on something, and I went on a tangent over there. Us,
Okay. Hit us with it.
yes, it is a good time to buy a home. One of the things that people are seeing outside of the fishbowl is that, oh, it's gonna wait. Well, what they're not realizing is that, yes, there's definitely inventory growing, but it's only growing because of affordability. Doesn't mean that there's a surplus. There's this massive amount of people waiting outside of the fishbowl, waiting to jump in and buy
Whoa.
these
Okay.
properties once it becomes affordable. So what about when it becomes affordable? Now you're dealing with this massive crowd called, we're all buying, prices go back up or don't get the house that you want. So it's not gonna crash. There's still a shortage of homes.
So because I see this every now and then, like the buzzer headlines, the hype. It's like more properties on the MLS than since in the last 5 years or whatever.
Right,
I can't remember
right.
exactly what it said, but right, the supply is like the
Yeah,
crash is looming. I mean, it's
right.
every year the crash is looming. You're saying that yes, supply is increasing, but that is due to legitimate affordability, maybe because the sellers are kind of just accepting the reality that hey, they can't just ask for ridiculous prices, but that doesn't necessarily mean that the demand can't match it because there's a lot of demand that's just kind of still dormant, maybe buying those bonds we talked about and they're waiting a
Yes,
little bit longer.
yes.
Is that what
And
you're
and
saying?
and that's the phenomenon of why people are also buying rates down now because they're realizing, "I'm gonna buy and I'm just gonna buy the rate down so that I can afford it or make it more comfortable for me." So
Right,
so
right, right.
it's not that there's a glut of inventory hitting the market. It's not. It's just houses are sitting a little longer because obviously affordability, of what's gonna happen with the economy. Am I gonna lose my job? And so on. Now, of course, those things will affect price, but it's not gonna crash it. Because the fact is most people who are selling could easily just take the sign off the front yard and stay in the house, right? For those people waiting on the
Mhm.
sideline,
Mhm.
don't wait on the sideline. It's not serving you.
Yeah. Get some base hits, get some practice in, get better at this
Yeah,
sport because when it's feeding time, you want to
right.
be the best player, right? Now is not the time. Like you're not going to get better at this. You're not going to be able to capitalize on it if there is a really good season to buy. You gotta. Like I don't think me and Ted are saying go buy
No.
dumb stuff. I'm not saying to go overpay on a new build. What we're saying is don't get out of the game because you're waiting on whatever the heck the market's doing. Awesome, awesome advice, Ted. I think that was fantastic. I really appreciate your time with us again. Hey, everybody, this is the ADPI podcast. If you could please help our mission of impacting 3 million military families in the next 10 years, we would highly appreciate you sharing this with your family and friends on any kind of social media, but definitely leaving us a rating and review and subscribing. This was Marky on Sitch, Ted
Bye-bye.
Canto.
Bye.
See you, everybody. Bye.